Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, we're joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, the last trade that, last couple of trades, I suppose, that we've been discussing is the pairs trade that you entered into, going long of the resources index and short of the financial and industrial indices. And it wasn't working out too well last week. Has there been any improvements in the trade that you enacted?
It actually has started to improve a little bit this week. If you have a look at the chart that I've got on the screen at the moment now, this shows the resources index relative to the industrial index. And what's interesting here is that we've got this big saucer bottom that's happened over the last almost a year, really. And we're seeing the relative chart here breaking above resistance. And for the first time in a long time, we're now seeing higher highs and higher lows. Now, what this chart is it's a relative of the resources versus the industrial. So in other words, you take the resources index and you divide it by the industrial index. And where you see it downtrending on the left here, that implies that resources are underperforming. It's now gone flat for nearly a year. Now it's potentially starting to show signs of life. In other words, the resources are starting to outperform the industrials, according to this chart. And if we look at the financials and the resources, again, it's a similar sort of picture. We've got a break of this downtrend over here, and we've also got a fairly large rounding bottom on this relative chart. And again, we're seeing a new higher high and higher low on this relative chart, and implying again that resources are starting to outperform the financial sector. So based on that, we did a pairs trade whereby we went long of the resources and short of the industrials and financials. We used the Satrix product to do this. So I went long of the Satrix Resi in the notional value of about 200,000 Rand. And then I went short of the Satrix Indy and the Satrix Fini in approximately 100,000 Rand each. In other words, these legs of the trade are paired off against each other. And all I'm doing is I'm looking for outperformance or further outperformance by the resources sector over the domestic sectors. That's all I'm looking for. A lot of people have said to me or emailed me and said, well, why don't you just simply go long of the resources then? What's the point of doing this long, short, complicated stuff? The point of a pairs trade is that it neutralizes the market risk. So if we were to see a major calamity that hit markets very, very hard, you would find the market would fall, but because we've got a corresponding long and short position here, all we're doing is we're looking for the one sector to outperform the other sectors. That's all. And because you've paired off with an equal size short and long, your trade would be fairly protected in that sort of an event. And a pairs trade like this is a relatively common hedge fund strategy. And we try and also provide new ideas and strategies on this show, in addition to the vanilla trades that we do. It's just to give a bit more insight into some other potential ways to trade the market.
Having said that, though, there have been some sort of, as you call them, white-knuckle trading days.
Yeah, they have over the last week. Because remember, with this trade, I said that I'm willing to ride this, and if it starts to move out the money by a tune of 6,000 Rand or more, then I'll cut it and just concede that I was wrong on this trade. And it's gotten very, very close. It's flirted with that level dangerously closely over the last week. But at this stage, as things stand right now, it's actually looking okay. We're still down on the trade, but not as much as we were. You can see we're currently down 1,068 Rand on the resources leg of this trade. We are up slightly on the industrials leg, and we are down slightly on the financials leg. So all in all, I think this works out to a loss of about 1,200 Rand or 1,300 Rand at the moment on this entire trade. So it's fine. I'm going to stick with it for the time being. Those charts that I showed you do look as if we're going to start, I still think that my
your basic thesis, your premise.
Yeah, I think it's still right. And it does seem still as if there's evidence that the resources are going to probably continue to outperform. But let's see. We never know. We never go into a trade with 100% certainty, and we've got our risk management in place. If it doesn't work, it doesn't work. But for now, it still looks okay, and I'm going to hang on to this trade for a bit longer.
Okay. Well, the other share that you talked about last week, you hadn't actually entered into a position on it, but it's a share that you were considering doing a trade in, and that was Anglo Platinum.
Yeah.
And this is a trade now that you've put on for the portfolio.
Yes, I have done it now in the last week. I've been going into this trade sort of in a staggered way over the last couple of days. I've got a big chart of it here, a big chart being the longer term chart looking back sort of 2 years here. What's quite interesting to note is that we've got this large inverted head and shoulders pattern over here. It's not perfect, but but I think for technical purposes that is close enough to being a fairly good looking inverted head and shoulders pattern. There's all this overhead resistance over here which comes in at about 465 Rand, and we've actually started to break above that neckline of that big inverted head and shoulders pattern now. What you typically do with these patterns is you take the height of that head at the broadest point and then you project that distance up to get your target. Now the reason you'll see the different sizes of the arrows here, the only reason is because this is a logarithmic scale chart, and if you look at the values of the share price on the right here, you'll notice that the scales are different. Anyway, be that as it may, this inverted head and shoulders target potentially targets 650 Rand per share if this pattern were to continue to be validated with further strength above 465 Rand. So it's looking good at this stage. What I'd really like to zoom in on though is that area that I've put a box around there with a dotted line, and go in and just zoom in on that more recent trading action to see what I saw there and how we're enacting this trade.
So basically from the end of last year?
Yeah, since the end of last year and into the first 3 months of this year. What's very evident here is this triangle pattern that we've seen over the last 2 months. Now, triangle patterns are very often considered to be bullish. In this case, it's a continuation pattern. The thinking is usually that the breakout will continue in the direction that the stock was moving prior to the triangle consolidation. So here we had a rising trend, then we've had this triangle form, and we're now starting to see the breakout through the top of that triangle pattern. Yesterday was a very, very bullish day. And it's interesting that we're seeing this bullish action in the platinum sector, notwithstanding all the labor disputes in the sector and so on. We did discuss this last week, and we looked at the prices of platinum and we looked at the prices of palladium, and both of those prices are starting to tick up. We now entering the 8th week of this platinum strike. The stockpiles are starting to run low, and it's pretty clear that we are likely to see some fairly dramatic supply shortages in the platinum sector soon.
Although, having said that, it's been interesting to see an Amplats move up 5% in one day when there wasn't really much reaction to either the Rand or the platinum price itself. So
yeah, that's right.
Quite curious.
It's interesting to note the trading action in the stock over the last week, and this is part of the reason why I've actually done this trade. I know I flagged it last week, but this week I've done the trade, and I've staggered an entry over the last 3 or 4 trading days, really. And the thinking here was that I was watching the stock very closely, watching that trading action, and noticing that even though we've had a bit of a pullback in the overall market in the last few days, this stock has actually held up relatively well. It's been closing towards the high of the day every day, which implies that there's definitely buying activity at the lower levels. And it did suggest to me that with that underlying inherent strength evident in the daily trading action, we would likely see a breakout to the top side here.
Guys, talking about a staggered entry into the trade, that's not something that you do normally. Normally you go in with a set amount and you enter into a trade. So why stagger it over a period of days?
Well, my thinking was really that I just wanted to go in slowly and build a position slowly. Ideally with a trade like this, where you're looking at a triangle breakout, specifically you normally want to wait for a breakout through the top of that triangle pattern in order to do your buying. And that's the safest time to buy. But I was watching that internal trading action very, very closely, watching the fact that there was definitely buying activity at the lower levels, and I thought to myself, given that we're seeing that kind of trading activity in a weakish market, the likelihood is that we're going to see it break out to the top side. So I sort of preempted the breakout here, and as a result I went in very, very slowly. I staggered my entry with a small number of shares at a time, just to build a position basically. And typically these triangle patterns, as you see it here, you would take the height of that triangle at its broadest point and then project that up from where the breakout occurs, and that gives us a target of 515 Rand in this case.
So that's sort of a short-term target, whereas the longer-term target might be the 650.
Yeah, that's it. So yeah, short-term target 515. Longer-term we could potentially justify higher prices still here. I'll watch it and see. You know, our short-term target is what we're really angling towards here. But you never know. Maybe this might be one that we look to try and hang on to a part of the position for a longer time and see if we don't get more out of it through the year. But let's see. What I've done is I've gone in and I've bought at an average price of 450 Rand and 46 cents over the last few days. My stop loss is going to be a close below 435 Rand.
Okay.
And as I said, the target is 515 Rand here. Now, if we look at the risk to reward ratio blocks that I put on these charts sometimes, the red block there illustrates the risk. In other words, that's the difference between our entry price and our stop loss level. And then the green is our potential upside to our target, which is our reward or our potential reward. So if you look at that, just by eyeballing it, you can see that there's a much bigger reward evident than what the risk is. We're talking about a 4-to-1 risk to reward ratio here. And also just on this note, remember I said about buying a triangle breakout on the breakout. The thing is, I've gone in earlier. I've actually bought it during the triangle structure while it's being forming over here, preempting this breakout. That affords me a much better risk to reward ratio than what I would otherwise have been able to achieve if I'd waited for the breakout, which is quite nice. But of course, you do take an extra chance because you haven't waited for the confirmation of a breakout to the upside. Anyway, having said that, it does look as if we've got the breakout now and things are looking good here.
Okay, so in greater detail, if you take us through the mechanics of the trade.
All right, so I've gone in at 450 Rand and 46 cents. My stop loss is 435 Rand.
It's quite a tough stop.
It's 15 Rand per share, 15 Rand 46 per share. And we're looking at possibly, 65 Rand upside here. So it's quite a decent risk to reward ratio still. And also that stop loss is based on a technical level. It basically would imply that the stock would have to break out the other end, in other words, through the bottom of that triangle pattern that I'd identified, which now looks highly unlikely. Right, I'm risking 2% of our trading capital here, which is 5,740 Rand. To get our position size, we take our overall capital at risk, 5,740 Rand, and we divide it by our risk per share, which is 15 Rand and 46 cents. That gives me 371 shares, so I'm rounding it down slightly to 370 CFDs that we are trading here. My target is 500 and, well, I've said 510 here, it's actually 515 off of that previous chart, which gives us a risk to reward ratio of 1-to-4. Which is very decent, and I'm happy with that kind of a risk to reward ratio.
Guys, just a point on a staggered trade. Does it imply higher trading costs because you're sort of buying, you know, maybe a few times in a day or once every day?
It does imply slightly higher trading costs because your broker, and particularly with CFDs, but also trading stocks as well, there's a minimum fee that you pay to your broker, and if you're doing it over a number of days, you would have to pay that minimum fee each day. So yes, it does actually increase your transaction costs to some extent. Yes.
Okay, so that's something that you need to take or bear in mind if you do a trade in the way that you've structured this.
Correct. Yeah.
Okay. So, and the target 515 Rand. If it hits that target, would you then take profits, or and if it looks as if it might rally further than that, would you hang in there for a bit?
What I might do is bank half a profit at that level and then see, and maybe ratchet a trailing stop loss up on the remaining part of the trade, to see if we can't get more upside out of it. But otherwise, I think we'll assess it when we get there. I don't want to count my chickens.
Let's not preempt anything here. Okay, guys. So what does the portfolio look like then at the moment?
All right. So we're up from last week. We've got just over 293,000 Rand in our account. So it's up 17.5% for the year to date. These are the trades that we currently have open. We've still got our option structure in the background. We'll talk more about that some stage during the next quarter. We've got our pairs trade, which we discussed, where we're down 1,200 Rand there. And then this Anglo Platinum trade is up. We just over 6,000 Rand on the good side of that trade. So that's looking good. So all in all, it's nice. I think this is a new high for the year, if I'm not wrong, for the portfolio.
Yes, it is. You're up 15% or thereabouts.
There we go. So it's looking good. I'm happy with things as they stand at the moment. And we'll see how the market unfolds for us the rest of this week.
Oh, come on, Anglo Platinum, don't disappoint us. And Garth, then just a last word on your next course dates.
All right, I've got an Understanding CFDs course in Johannesburg on the 27th of March. Then at my high probability trading course, I'm running that on the 29th of March, which is a Saturday. It's a full day course. And then I've got face-to-face sessions. We're going countrywide with these things now. These are highly charged information sharing sessions. We do live analysis in the venue. We've got one in Johannesburg on the 26th of March, Cape Town on the 2nd of April, and Durban on the 3rd of April. So anybody that would like to attend any of these events, please email me, garth@traderscorner.co.za, and I'll send you the details.
Great. Garth, we'll leave it there. Thanks as always for joining us. We'll see you next week, Tuesday. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.